Traders, welcome back to our price action trading lesson. We're looking at S&P 500 MA futures. The time frame is 2000 tick chart, which is very similar to 1 minute chart, but tick charts allow us to see more details. So what is the structure today for the ES? Well, we started with a very significant bearish spike down, which is giving us a bearish bias. You have a small break new extreme, but you can't really go long just yet. This is just a high-low setup. You would need at minimum failed second entry short above EMA, a reversal pattern. That never happened and market continues to go lower. So now you have to ask yourself, hold on, why after breaking extreme, market continues to trend lower? And this was already significant spike down to begin with. So we are combining all of these clues and we can arrive to the conclusion that the market looks still bearish, the trend can continue, and you're already thinking about potential secondary channel. A lot of times there's going to be some spike in a channel pattern, something like this. This is something you keep in back of your mind. Let's see what's going to happen. And we have uptrend working higher, breaking new high. There's always a correction in every single trending market. And it's a second entry short. Second entry short, strong bearish bar, closing below EMA, 2 legs up. It's a little bit more advanced, but this is first decent high probability setup because right now you're predicting potential secondary channel, spike in a channel like this. By the time you get a lower high, you're selling at the very bottom of the move, basically at the very low of the day, which is not something you want to do. Now, when the trend is strong, you're going to be forced to be selling quite low. That can happen. So your idea to short is definitely not bad, but it's a little bit more aggressive to be selling at the bottom like this. We have some potential overshoot, but also we can adjust the channel a little bit to get some better fitting alternative. You don't have to be perfect. You just have to be close enough. Something like this. This actually fits pretty well. It still keeps the structure intact. There is no setup. We're enough with the EMA, horrible signal bar, so you have to remain patient. We're enough with the EMA, you can see the gap. Breaking new high, uptrend played out again, so this is a sign after 2 legs up, the correction can end. There is no good setup though. Can I get a lower high below EMA to capitalize on the brand new push phase? By the time you get a lower high, you're so far from the EMA at the very bottom, you can't really take it. The market continues to go lower, so I'm going to redraw once again. Correction. At this point when I'm watching this live, the trend looks very confirmed, okay? So I am expecting new low to be tested, but this uptrend is in play. Okay, I can't go short. I would need some failed second entry long now below EMA. You're back above EMA, so that's a sign that the correction is not over. You cannot sell back above EMA, especially since this uptrend doesn't have new high. So you have to remain patient. I was thinking about breakout pullback, lower high breakout pullback to test the new low, but market just keeps going sideways. And we can see that the market continues to go higher. In fact, the correction is transforming into brand new uptrend. So once I'm watching this and I can see how strong this correction is getting, I'm basically pretty much forgetting about new low, okay? Because the retracement is starting to be quite significant. Now, I'm not completely giving up, but at this point, it's not my main priority because we moved so far away from this. So I'm right now focusing on this uptrend working higher. What you can do, you can also draw a channel like this, and you can basically use this as a midline. You can see we're going to draw a channel like this. This is going to be pretty much midline for the spike and channel pattern. So you don't have to be perfect. You just have to be close. Okay, market is correct. I'm going to redraw a brand new downtrend working lower. Okay, break, new extreme, downtrend played out. And this is important. Since you're breaking new extreme and you're back above EMA, you're thinking about high-low confirmation setup. Because you're not going to test the new low, because if you're going to test the new low, there's going to be established brand new downtrend. The fact that you have already breaking new extreme and you're back above EMA, these two important clues are telling you you're going to go higher and test the new high. So can I get high-low confirmation setup? No high-low confirmation setup yet. Do we have new high? We don't, so I still expect prices to continue going higher. I'm going to redraw the short-term downtrend. And this is interesting setup. New high, first entry long, pullback, second entry long. If first trigger lower, reverse back up. There is strong momentum. This is a second entry long, or you can view it as a visual second entry long. It's below EMA, but this is a nice setup because it tick lower, reverse up. There is momentum, and you have some support here. You expect new high following trendline rule. So this is a great setup. Second entry long, quick snapback. Ride it back to the top because these 2 legs down are so broad. Market moves in pairs of 2s. You can see 1 leg down, break, second leg down. You have breaking new high, okay? So At this point, 2 of our channels played out, so I'm going to pause looking to go long, but market keeps going higher quite significantly. Okay, and you can tell how structured the move is. You can see that there is some market geometry. Let me see if there is some secondary channel. Okay, so I was looking for something like this, and I can see how nicely it fits. So many confirmations here. So this explains why after breaking new high, there is only first entry long that worked. Why EMA keeps holding. You have so many high lows. So this is a sign that I can right now adapt to this channel. There's so much market geometry and the trend overall looks structured. So this is a good sign that this trend is still in play. We have another count reset. I have to reset the count at each new high, first entry long, pullback, second entry long again. It's not only second entry long, it's also mini failed breakout out of this congestion, small consolidation, high probability setup, and market continues to go higher. So we're not even thinking about selling. You cannot pick a top. You are trading a bullish trend. Only think about buying. You're not even thinking about selling as long as uptrend is still in play. Okay, some of these setups may look tempting, but you're going to get burned. You're going to make more money if you focus on buying only. Always follow the trend. I'm going to redraw the downtrend, working lower. Right now, what's going through your mind is just respecting corrections and looking to go long. Okay, it's just about timing the entry properly because you have the bias and you have the pattern. So your goal is only to right now look for these corrections at the bottom where the key entry point is and think about going long. You have a new high, first entry long. I'm thinking about second entry long. We have a second entry long here, but of course you cannot go long above bearish bar. This is a tier 4 signal bar. I cannot go long above this bar, so there is no entry. You cannot take it. We actually have some second entry long. We can call it continuation. You can view it as a visual second entry long, and it's also mini new low first entry short, tick higher, reverse down, so second entry short failure. It's very hidden, it's very mini, but it is there. But you can view it as a second entry long. Now, generally, you don't want to enter the third bar. You can consider double bar entry. I decided to risk it today because I saw the mini failed second entry short. So I'm going to market. I took it and I had losing trade right here. Actually, you can get out with smaller scalp. I had a little bit larger scalp today and it ended up stopping me out. It was more aggressive. It's not fully textbook because the initial signal bar was like this, but trading is about taking a chance. I was predicting correction phase ending and a brand new push phase starting, which you see that this is right now happening. The correction phase is depleting. And this would be normally a good setup to re-enter because you have triple test, one bounce, second bounce, third bounce, basically also multiple test bounce here, 2 legs down again. But problem is I have inside bar here. You can see this is an inside bar and I can't really take inside bar. If you don't have inside bar, you can consider re-entering because this is just a fake out trap. It's indicating, okay, the buyers are still in the market. There is small support. EMA keeps holding, but since it is inside bar, you know, it's very hard to take it inside bar. We have a rule. Skipping inside bars, no good bar, nothing, and market right now is correcting. Do we have new high? No new high yet, and we have high-low confirmation setup. Almost what would be double trap. Double trap has to close above EMA, so not really. This is a high-low confirmation setup. This is a great setup, but the signal bar is gigantic. How big is this bar? 775. You know, you don't have much room before you're gonna scalp before reaching these highs, so you can go long only if you use some deep limit order. This is a massive bar, so we can mainly market educational wise because the bar is gigantic. It's hard to enter, but you expect new high, downtrend play with the break new extreme, so the correction phase is over. This is exactly what you want to see. There's also a small break and new extreme right here. We have to drill very tight, so we expect new high, boom, and we have a break, push to new high. So right now what I'm going to do, I'm going to pause looking to go long. Okay, there's a chance to draw a channel a little bit wider, but because we have such a strong correction now, okay, I'm going to keep a break in new high for now, and I'm going to follow right now the most recent structure. You have massive push above EMA, okay, which is confirming the bullish bias. If I'm going to zoom out, we trade up into this. So since we traded up strongly into this, I'm always better off following the main bias. Okay, so the bias is bullish, so I'm not really thinking about selling. I'm thinking more about buying. Okay, I want to capitalize on this edge because you trade it up and you can see all the significant moves happen when you buy at the bottom. You can get trapped many times just to try taking some small insignificant scalp. If you go long, you can catch the very beginning of the push phase. That's the goal of following price action strategy and having an edge. There's a decent second entry long right here. New high can reset. First entry long, second entry long, and I believe it is also new low, no break below, no break below. First entry short, second entry failure. So this is double high probability setup. This would be great if you have better bar, because this uptrend needs new high. You trade it up into this, EMA keeps holding, and two high probability setups in one is a very good confluence, but the signal bar is weak. So I can't really go long here. It ended up working. If you have a better bar in your chart, definitely you can go long. Double high probability setup, but in my chart, just can't take it. Market continues to go lower, and you have the two-legged pullback correction on a little bit larger frame. One leg down, break, second leg down. How big is this bar? 6.5. Not terrible. More advanced trader can consider riding this back to the EMA, because while you have two legs down, you can see EMA is going sideways for such a long time. You have some consolidation. It's actually a second entry long, excuse me, new high first entry long, pullback second entry long. Again, little fell breakout. So you may consider riding this back to the EMA. Once again, a little bit more advanced. It's a decent entry. You're so far from the EMA, you're probably going to pull back. If you want to be safe, you want to take a high-low. You have technical high-low here, but of course you cannot go long above bearish bar. So your next thinking process is a failed second entry short. Can I get a new low, first entry short, second entry short failure? Why am I not thinking bearish? Well, because I have two legs down. I have two legs down, and downtrend played out with the break in extreme. And since we traded up into this trend range and downtrend played out, I'm more inclined to be thinking about buying, and I get a failed second entry short. No failed second entry short. You have a small break, new high, but it actually looks too much like one move. And when I was watching this live before I released my data, I actually had uptrend in play. And this is too steep, it's too clean. There's a spike and a channel pattern. I'm going to redraw the downtrend. Working lower. Can you take second entry long if you have a better bar? Yes, you can, because you have nice two-legged pullback. Market moves in pairs of twos. Uptrend is new high. But after I released my data, I have a bearish bar, and I cannot go long above bearish bar. But you can see how broad these two legs are. Once you get a break of the trend, you expect new high, and you want to take second entry long. Okay, so horrible bar here on my chart. Gonna redraw downtrend. Working lower. You have some high low. Now, when I was watching this slide, it's a little bit tricky because you're very close to creating. Yes, you're one tick away from having a new high. And a lot of times, market is going to consider this as new high tested fully. Okay, you know, normally this would be a high-low confirmation setup, which would be okay. If you don't have a double top, you can take it, but because you have a double top, you know, you never know if the market is going to deem this attempt worthy of being counted as new high. So a little bit more aggressive. Push to a new extreme and a massive spike up. Massive spike in volatility, breaking new high, uptrend played out. So you can see the structure is definitely still quite bullish. So right now I'm going to redraw downtrend working lower. Okay, and now we have conflicting variables because we have series of lower highs, but at the same time we traded up into this. So there's a chance, there is some potential wider channel like this, but this is not confirmed yet at all. And also this spike in the channel played out with the break new high. So everything played out here. We can't really take anything. This looks like a wedge. You can see wedge price action. Channel played out with the break new high. Exhaustion push to a new extreme. So there's pretty much no edge because everything played out. The wider channel is not really established at all. So you gotta be careful. We can't really take anything because the context is not there. There's no good structure to support it. You have a series of lower highs. I was actually drawing also downtrend like this. Okay, and this is where the confusion happened because you have massive area where you have conflicting variables, because this downtrend looks like it needs to get new low, but also we trade up the entire day and you have some reaction here over the bigger channel. So I was thinking about maybe failed second entry long, but failed second entry long formed below bullish bar. Of course, you cannot sell below bull bar, and the trend line is still holding. You're back above EMA. You cannot sell once price action is going back above EMA. That's a good sign that the bulls are in the market. EMA needs to reject if you're thinking about selling. So if I'm going to zoom back, this was tricky area, okay? This is exact area where you have to remain patient because it looks like the downtrend wants to get new low. At the same time, it looks like the uptrend is getting confirmed and is the bigger pattern. So you can't go long and you can't sell at this point. You need to weigh this out because once it gets tempting to both buy and sell at the same time, that's how you're going to get trapped. Remember, we're not hindsight traders. you're making a decision once you're watching this live and you want to have edge on your side. And now the market is pretty much chopping towards the close. Nice high low, but it's a little bit too late. And market ended up actually rocketing higher here. So this is the overall structure for today with a massive spike to the upside. We start with the downtrend. Surprisingly, this downtrend didn't get new extreme, but you can quickly adapt once the retracement is deep. Quite a few high probability setups on the way up, so this was a decent uptrend working high. You can make a case for a few more aggressive trades, like this high low right here, or maybe this lower high right here. So you can definitely make a case for a few more of these high probability setups. Pretty decent price action. It got a little bit confusing here. This is basically super conflicting, and you can see exactly both sides are getting trapped, early buyers and early sellers. Don't underestimate these areas when you have too many conflicting variables, because once you have trend down, it's easy to sell. Once you have trend up, it's easy to go long. You're just waiting the correction out. But here you have two conflicting patterns, and you need to simply wait it out. That's part of trading as well. You need to execute when the setup is there, and you need to remain patient when the market structure is developing and it's too trappy and unclear. But I hope you had a good trading. I'm going to wrap it up, and I'm going to talk to you next time. Good luck in your trading.